Hi there. So this video will be actually starting with journal entries with GST. I hope you have seen my earlier video on what is GST and what are the different rates and types of GST. If you haven't watched, please go watch it, come back. Now, a quick recap. Intra-state transaction meaning? Intra meaning within the state. If between two cities the purchase or sale transaction is happening, so we apply which taxes? CGST and SGST. And if it is an interstate transaction, meaning a transaction between two states, okay, in that case we apply IGST. Okay, that is clear. Now one more thing, whenever we are purchasing something, it's an expense for me, right? Payment of any expense or purchase of goods or assets. In that case, the tax that we apply, whatever it is, CGST, SGST or IGST, that doesn't matter. But in front of that GST, we need to write input. Input meaning something that is coming into the production or into your business, which you intend to again sell or use it, right? So these are inputs for you when you are purchasing, spending for expenses. Yes, this is your cost. So along with that, we will prefix this word input GST. Similarly, whenever we sell off goods or we are receiving an income, we write output tax. Output CGST, output SGST or output IGST. Okay, because that is what we are selling. That is my output. Clear? So whenever goods are being purchased, expenses being paid, assets being purchased, it's input tax. When we are selling goods, receiving an income, it is output tax. Fine. What is input tax for me? It is it a cost to me? No. It is not a cost to me. It's an asset to me. Why? Because whatever taxes I pay, I can claim it from the government when I sell those goods. Okay? Because when I am selling, I am collecting output tax from the customer. Customer will pay me tax, right? See, you and me as customers, when we go to the market, we buy a product. Aren't we paying tax? Yes, we are paying tax. Who is actually collecting these tax? The government. But are we going and paying to the government or the shopkeeper? Right? So here we are paying as customer will pay to the person from whom he or she is purchasing. That person will deposit that amount to the government. Okay. So for him, this is the output tax when he sells. This is a liability for him. It's not an income for him. It doesn't go into his pocket. This has to be deposited to the government by the seller, right? Therefore, it has to be paid to someone. This amount that is collected is just an intermediary in between the customer and the government. Take it from him, give it to the government, right? So this is a liability for the seller. Or ये क्या है? Whenever I pay input tax, I've paid it. In that case, I am the customer, right? I've paid it. That product I am selling again. Right? Now, I have paid this tax. This tax will go to the government eventually. So, the government will receive on the same goods tax when I pay, tax which the customer pays, or maybe this person also sells to someone else, tax when he sells. So, if I do not subtract this, or adjust this input with output, the government is collecting tax, every time we are selling the same goods. Obviously, it doesn't make any sense, right? So, whenever I pay a input tax of 100 and collect output tax of 200, suppose. So, here 100 I have already paid to the government. Now, I am collecting 200 on the same goods. Understanding? On the same goods, I have paid 100 to the government. 200 I am receiving when I am selling these goods. Now, the government should not get 100 plus 200, 300 name in the government. How much should the government get? On the differential amount. 100 is fine, already given. 200 I am collecting. So now, what is the excess? 100 rupees collect. This 100 needs to go to the government. Alright? So here, 200 output minus input. 100 rupees. 100 rupees I will submit to the deposit to the government. So how much is the government getting in all? 200. 100 from me and 100 from my customer. So the final amount of tax That is what the government will get. Alright? So this we need to adjust. Therefore, since I have paid this, I can claim it, reduce it when I sell it before depositing to the government. So this is an asset too. So input tax is not a cost, it's an asset. Output tax is not an income, it is a liability which needs to be paid to the government. Fine. So I hope this is clear, the entire system. Okay, now coming to the journals. Fine. So now we can go to journal. Pass necessary journal entries for the following. May 10th, goods purchased from Manoj 20,000. Paid 50% of the value of goods plus tax immediately. Fine. So I am paying part of the value and remaining will be a credit transaction, right? So you all know what is a transaction for purchase, right? So we are on May 10th, purchasing. So purchase is an expense. So purchase is account debit. What is my value of goods purchase? Here I will not add tax, remember. Tax I can claim, I told you, it's an asset to me. Purchase is an expense. I cannot merge them, right? So purchase I will, debit with this, the value of goods without tax. So मेरा cost है 20,000 here, my expense. On that, of course, I will have to pay, right? All assets will be debited, expenses debited, assets debited. What is my asset here? The tax that I am paying right now, the input tax, which I will claim later. So here I will debit input, rate tax applicable is CGST, input SGST. Now I can also write it as I CGST or I SGST. These short forms are acceptable, but please take care of it that you write the correct one. Debit, what is the amount of tax that I will pay? 6% CGST, 6% on the value of goods. 6% of 20,000, 1,200. SGST also. This is also one thing that you need to remember, that CGST and SGST cannot be different. Exact same amount hoga, because the entire rate applicable is what? 6 plus 6, 12. This is the standard rate, right? So 12% ka half goes to central government and half goes to state government. Alright, this cannot be different, okay, in case of intrastate transaction. So ये हमेशा equal रहेगा. Then now we have paid cash, so I credit cash account, correct? Cash कितना pay किया? Half of this 10,000 plus the taxes. Taxes were 24. So I have paid 12,400 cash. Half of the value of goods is still to be paid. So Manoj is my creditor with 10,000. Entry done. Okay. So this means, again a recap. This is always debited with the value of goods. No tax involved there. Here we debit the taxes separately and then we see how much cash is going out and how much is on credit if at all. Okay. This is a mixture of cash plus credit transaction combination, right? So this is done. So being goods purchased, partly for cash and partly on credit. That's your narration. 12. Return goods to Manoj. Now return goods to Manoj were 2,000. 2,000 is the cost of the goods. So what is the journal entry, usually without the tax, if you tell me? Yes. Manoj account debit. To whom are we giving? Manoj, my creditor. My liability is reducing because I am returning goods. So Manoj account debit to purchase return. That is the entry. So if I write this, Manoj to purchase return. Now purchase return account. What is the cost of the goods? 2,000. As I have debited purchases with cost, this also should be debited with cost of the goods, not including taxes. 2,000. So I am returning goods worth 2,000. What about the tax that I have paid on it? I have already paid tax on it. Yes. At this rate I have paid on the entire goods. On this goods also I have paid. So what tax ka kya hoga? Does it still remain my asset? No. Because I've returned the goods on that, the tax we have to cancel on that. There's no more an input that I can claim when I sell the goods, because these goods I'll never sell because I've returned, right? So जब purchase हुआ, we debited input taxes. When I'm returning those goods, this asset, my asset of input tax is going down, so I credit that asset. My asset is reducing. So it is here input CGST to input SGST account. Alright? This I credit. Now 6% of what? Not this 1200. That was on 20,000. 6% of 2000, which is 120. Alright? 240 and 2240. This is the amount I have debited to Manoj, because I will not pay him 2240. I will not pay him for the cost of the goods, and I will also not pay him for the tax. Clear about that? So here Manoj's account C is always derived, right? First this is given, I debit that, I find out the taxes, and then last में ये amount creditor को जाएगा. Go in that order precisely, otherwise you will go wrong. Many of the students get the entry correct, but the amount they jumble up. So always start by putting the amount C in the purchase return. Okay, this done. Then next one, 15th. Sold goods to Radha, 25,000, CGST 9%, SGST 9%. So here we are selling goods to whom? Radha. Of course, there is no cash involved. It's completely credit transaction. So Radha's account debit. How much is she supposed to pay me? Is she supposed to pay me 25,000 only, or the taxes also? Taxes also. She's the customer. She needs to pay me the tax. So how do I calculate that? I will credit this. This is the usual account. Without tax, we've done that. Radha to sales. So sales account again with the value of goods. What is my income? 25,000. Income is 25,000. This is the income, right? Value of goods. You will not add that to sales account. What? The tax. Because tax is not my income. It is my liability. And what tax? Output CGST to output SGST. Alright? So this is the entry. We are selling, making an income. Income से related क्या है? Output taxes. And those are my liability. Liabilities to be credited. When I am incurring a liability, I am collecting this amount. What amount? 9% of 25,000. 2250. So 2250 and 2250 here. CGST and SGST. This is what I am collecting on this 25,000 goods that I am selling. So how much will Radha pay me? 25,000 plus this, which is 4,500. 4,500 meaning 29,500 is the total amount she needs to pay me. So she is my debtor with 29,500. Fine. So how did we start the sale entry? With sales account. 25. We calculated the tax, totaled up the amount and debited Radha. Here. Then Radha returned goods. 21st. Radha is returning goods worth 5,000. Fine. Sales return account debit. So sales return account debit. What is the value of the goods that is being returned? 5,000. See, sales return debit. See, purchase return I have debited the value of the goods. Sales return also I have debited the value of the goods. Fine. Here I credit, here I debit. Then, what about my liability? Now, if Radha is returning goods worth 5,000, will she pay me tax on that? No, she will not pay me tax on that. So, is that a liability for me? I am not collecting it from Radha. Why will I pay it to the government? So, my liability is reducing. So, I debit output tax with this. Output CGST account, output SGST account, all will be debited when the goods are returned by the customer. 9% on value of goods returned 5,000. So it is 450. Correct? Then What do I credit? Who is giving me the goods? Radha. So Radha is going to pay me less. How much less? 5,900. She is not going to pay me 5,000 for the goods she is returning, and she will not pay me 450 for these taxes each. 900. So she will not pay me this 5,900. So I need to credit Radha with 5,900. Easy? Yes. All you need to remember is where to start. Purchase with the value of goods, purchase return with the value of goods. Then you calculate tax. Sales and sales return with the value of goods, then you calculate tax, and then you see the other account. It can be for cash, it can be on credit. Clear? Now, coming to the last one, payment made of balance amount of GST. And what is this balance amount? I already spoke something called balance. Whatever we have collected, we need to deposit. But we will subtract what we have already paid to the government. So we will not pay the whole amount here. So here, whenever you get this entry, you need to adjust the output against input. Now usually we see that the output is more than the input, output tax credit. But it's not a standard. There might be a case where input taxes are more and output is less. Let us see here how much is my output tax. Okay. So we do what we do is output here I write and input so that I can adjust. CGST, SGST. Fine. Let us see. How much output CGST have I collected? Output CGST 2250 I collected, but because of the returns I have to subtract this, right? So 2250 minus 450. This is the net tax, output tax I have to pay to the government, right? So this becomes 1800. Yep. 1800 is the output CGST I need to pay to the government. Correct? Therefore, output SGST bhi wahi hoga because they have to be same. 2250 collected minus return ke time mein debited. Difference. Net amount. What about input? Input I paid 1200. Yes, CGST. But I will deduct 120 because I don't have to pay that. I have returned goods worth that. So 1200 minus 120 is what is my input tax that I can claim. Isn't it? This is what is my asset with me. So here it is how much? 1080. 1080. So my input tax is less, output tax is more. Liability is more, asset is less. So let's set it off. Okay? This is the set off. So I will subtract this 20, 720, 720. This amount is my net liability to be paid to the government. Alright? Again I am repeating. So here whatever you have collected, 1800 minus whatever you have actually paid, this you need not pay again. You will subtract from that output minus input, and so 720 you have to pay, and this is the balance amount that I have to pay to the government. Okay? So we just paid. We will first pass this adjusting entry and then we pay off the amount. Now all of this can be done in one single entry together. Okay? So let me show you how we do that. This will be, usually the businesses, don't submit GST, every day, whatever they have collected from by selling the goods. They wait till the month end and there's an account with the government and they pay off in the account online. Everything has become very simple, when especially the filing of taxes and payment of taxes, everything is simplified. So on 31st of May, what happens? I'm paying. So how do I find out how much do I have to pay? When I'm paying, of course, I'm settling off my liability. My liability is going down. No more liability if I am paid. So what is my liability account? Output. So output CGST account debit. Output SG account debit. Yes, my liability is completely being wiped out. How much is my balance liability? 1800. So 1800 in the debit. Fine. My asset. I'm utilizing my asset. So no more an asset for me. Subtract kar rahe na. That is how we are finding the balance. So I am crediting input CGST account, input SGST account. Okay. So this 1080 is no more an asset to me because I am already utilizing it to set off a liability, to reduce my liability. And once I have done that, see, this is what I have done to set it off. Yes, output debit ho gaya, liability khatam, input credit ho gaya, asset khatam. And the net amount to be paid will be going through my bank account. How much? 720 here and 720 here. So 720 into 2. This is the amount I need to finally pay at the month end, 31st. So ये हो गया clear. Fine. So purchase, purchase return, sales, sales return, and setting off at the end of the month. Okay. So this much, if it is clear, we can take the next sum. Okay. Get ready. Right then. Sum number 2. Journalize the following. Purchase machinery 1 lakh at 12% IGST. Fine. IGST is showing that we are purchasing this machinery from some other state. Fine. Now machinery is an asset. We do not debit purchase account. Okay. But the machinery is also taxed. This is also an input for us, right? We are purchasing an asset or a good. We need to pay tax on that. So along with the entry, of course, this seems to be a cash entry. So here we do the first one as machinery account debit. What is the cost of the machine? 1 lakh. 1 lakh is the cost. As you know, we debit the cost of the goods to purchase account. We debit the cost of the machine to machinery account. Okay? On that we calculate how much tax we need to pay. That is my input IGST. IGST. Okay. So that is 12% of this, meaning 12,000. Fine. Entire 12,000 together. There is no two, CGST and SGST here. It's just 12%. Whole of it is IGST. So 12,000. So how much do I have to pay for that? So you can either credit cash or you can credit bank also. 1,12,000. This is being machinery purchase at 12% GST. Alright. So purchase of assets is also taxed exactly the same way as we tax goods. Easy? Next. Paid rent. Now rent is an expense. Again, just like purchase is an expense, rent is also expense, and we have to pay tax on that as well. So most of the expense we will be paying tax on. But there are certain expenses which will not be taxed. Now what are those expenses? We will come to that later. Let us see this. Paid rent 10,000, 2.5% CGST and 2.5% SGST, meaning this is at the 5% rate. So here rent is an expense. So rent account will be debit all expenses, right? This is the basic journal entry. So here we debit 10,000 because my expense on rent is 10,000. Plus I am paying tax. So input CGST, input SGST, debit. Both are assets for me, which I will claim later against output tax. 2.5%, meaning 5%, this is 250 rupees. So 250 rupees. Okay. This is the tax. So how much will I have to pay to my landlord? Cash. 10,500. See how we are getting it? Most of the confusion is in the amounts, because you all know it is rent to cash, leaving the taxes. Rent to cash. So rent will be 10 or cash will be 10. That is the doubt, perennial doubt. Obviously rent is 10. See, if you think, logically, 10,000 he is asking my landlord. 10,000 he should get, right? Apart from that, I pay taxes, which is of course over and above that 10,000, right? That he will take from me and he will have to deposit to the government, right? So 10,000 stays with him. So my expense on rent is 10,000. Clear? Come to wages. Wages is 900 and no rate of taxation is given here. Even if the sum had stated initially that apply a common rate of say GST at 5%. Even then I will not tax wages, because there are certain list of expenses which will not be taxed. Wages is one of them. There are salaries, electricity bill, water bills, yes, and certain travelling expense also, which will not be taxed. They are exempt from taxation. Clear? So here we have just to pay the wages, and wages account to cash will be the entry. No tax involved. So you will have to keep in mind the list of items which are exempted from such tax tax payments. So here if you add tax, it will go wrong. Wages account debit 900 to cash account 900, being wages paid. Alright. So a list of those items will be attached at the end of the video. You can go through it once. Received commission. Now received commission, this is an income, 500 rupees at 12% IGST. Great. So what is your commission income? 500 only, not including tax, right? The tax that you will collect here in this case is output tax, because you are providing a service, you are earning income just like sales, right? So here you will receive cash, which will be including the tax. So to commission received. This is the general entry without the tax. Cash account debit to commission account, and output IGST account. Alright, 12% of 500. So 500 if it's my commission, 12% of that will be 60 rupees. Fine. So this will give me 12, right? Yes. So 65, 60 we are receiving. Correct? So this is commission received including the tax. Simple. This sum we have learned that we pay taxes even on assets and expenses, but some expenses are exempt from taxation, and we collect tax while we get any other income even except sales, right? So these entries, if they are clear, we can move on to the next set of entries where goods, there are the adjustment of taxes paid on goods we will be dealing with. Sum number 3. Yes. So you had a look at those expenses and situations where no GST is supposed to be taken into account. It is no tax involved in those transactions. Okay, please remember those, because those are related to certain expenses which the government doesn't want to tax, and those are certain transactions like say amount brought in by the proprietor into the business, or amount deposited from the bank, withdrawn from the bank. There is no purchase or sales are happening, something like that. There is no value addition done. This is just exchange of money, right? So whenever there is a payment, there is no GST involved. When you sell, you record the purchase, sale, those entries will have GST, but when you are receiving payment for that, those entries again will not be taxed. Are you getting it? So those entries you just have to take care that don't apply GST everywhere in all the transactions. Alright? Coming to these. Now we have already done a sum where we had done purchase return, right? Meaning the goods that were purchased were returned. Therefore, the tax, the input tax that we had paid on it was also cancelled, because since those goods I will never be able to sell, I cannot be claiming the input tax paid as a offset from output tax collected, right? I cannot offset it. Same situation, a similar situation arises when the goods get destroyed by fire. Will I be able to sell those goods? No. So whatever I have paid for the cost of the goods and plus the tax entirely is my loss. Okay. Goods given away as charity, I will not be selling. So my charity is not just the cost of the goods but also the taxes I paid on it. Goods withdrawn by proprietor. Now he is withdrawing goods worth say some 10,000, but the business has acquired those goods not at 10,000, 10,000 plus tax. So the proprietor, when he takes away those goods, we will not just ask him that, okay, this is your drawing 10,000. His drawings would include the taxes also, correct? Because those goods are being taken away by the proprietor. So under all these circumstances, we need to write off the input tax that we have paid. Write off meaning we need to credit it. That's it. So let us see the entries. Proprietor withdrew goods worth 10,000. Generally, what is it? Drawings account debit to purchases. This is the entry we pass in case of goods withdrawn by proprietor, right? But here, these purchases were made including the taxes. So here I credit input. Now, what tax? It is not specified. CGST, SGST, IGST. What do I assume? Yes, I mentioned that in the first sum. That whenever it's not mentioned where the transaction was done, from where did I purchase the goods? Within the state or outside the state? I don't know whether I paid CGST, SGST or did I pay IGST. So I assume that the goods were bought from within the state, meaning intrastate, meaning SGST, CGST. Clear? So here I credit input CGST account and input SGST account. Alright? The goods were worth 10,000. So always purchase account I debited with 10 when I purchased it. When I credit it, I credit it with 10, the cost. Then the tax is paid on it at 12%, meaning 1200. This is what I have paid. So totally I will charge the proprietor 10,000 for goods plus the taxes the business has paid. So 12,400 is the total drawings that I will charge him. Alright? Pretty simple. Goods worth 600 given away as charity. What is the journal entry without the taxes? Yes, charity account debit to purchases. So charity account debit to purchases. Now if I have the taxes also, so it will be to input CGST and input SGST also. Correct? Again, where do I put this 600? Here, where? Yes, with purchases. Because the cost of the goods is 600. On that 12% will be 72, I guess. Yes. So it is 744. Yeah. That is the amount of charity for me. Clear? Credit purchase, goods are going out and the taxes. Goods worth 9,000 distributed as free samples. Advertisement account debit to purchases to input CGST to input SGST. Okay? So, amount of goods given away as free samples is 9,000. I put it in purchases. Then I add the taxes at 12%, meaning 1080, 1080. Right? So, comes to 9, 10, 11, 11 and 160. This is the amount of advertising. Now, if at all you are given loss by fire, loss by theft, goods worth 5,000 were lost by fire. So the entry again, instead of advertisement, drawings and charity, it comes as the loss by fire or theft account, whatever. So this will give me the whole loss. Then I credit purchases account with whatever is my cost of the goods, and I credit my input CGST, input SGST, okay, 12%, 600, 6,200. That's it. Same, right? So if you see closely, whenever goods are, that we had purchased are no more available for sale, we are crediting purchases in all the cases, also crediting the taxes, input taxes. The only thing is changing is the debit side, right? Drawings in case of goods withdrawn for personal use, charity for charity, advertisement in case of goods distributed as free samples, and loss by fire that when goods are damaged. I hope this is interesting, easy, doable. So get going, practice more sounds, okay, and get this into your veins. Keep doing accounts a simple way with Kavita Ravindra. Accounts is easy. Subscribe to my channel if you haven't yet subscribed. And please do press the bell icon to get the constant notifications on my channel. Thank you so much for watching. Take care.